Makes sense. So how has like your process evolved from that, institutional process? It's,
Yeah. I mean, I think the biggest change has been just kind of I would say the freedom to look anywhere at anything at any time.
mm-hmm.
At T Rowe, I was pretty, the analysts are divided into very specific kind of sector assignments.
Yeah.
And even at Blair, I would, my focus was small cap consumer.
Mm-hmm.
Um, in my current role, I look at everything. I look at all sectors, all industries, theoretically all market caps, but the reality is I do gravitate. I do gravitate towards small and mid caps because large caps tend to be picked over.
Yeah.
Um, um, so that's probably been the biggest change. It's just the ability to kind of live the intellectual freedom, to go anywhere and kind of do anything. The other thing is I just find myself kind of willing to, and this is probably an acquired skill too, just from having done this longer now.
Mm-hmm.
It's just, I get a lot less attached to ideas than I used to.
Right.
On
Good
the
thing.
buy side, I remember at one point I downgraded Marriott, many years later after kind of after that '09 bottom. But it was, there was a lot of there was a lot of kind of investment, intellectual, emotional, organizational, that I had internally in that company. And, doing this in a newsletter format and kind of being an individual investor, I can wake up the next day and change my mind. And I've certainly done that already.
Yeah.
Where,
Makes sense.
if things change, you pivot on a dime. Whereas I think structurally a lot of the way a lot of the money management firms are set up, I think that recognition just takes longer
Right. Is it because you have to
on both sides, right? So when things are selling out and also buying in, because it's just a lot longer process. You've got to get a lot of people over the line.
right.
You've got to educate people. You've got to kind of, the due diligence process takes longer.
Mm-hmm.
Buying and selling position takes longer. It just takes longer.
Yeah. Like you have to present it to like an investment committee, right? Or like someone and like make a presentation and
A lot
build
of
a
times you do,
case.
yeah. I mean, it
Yeah.
depends on the individual firms. Some firms are more nimble than others, but
Mhm.
the large managers, it's definitely more the committee type of situation.
Yeah. Makes sense.
And it may not be an official committee, it might be a group of PMs, but it's still effectively a committee.
Right.
You have
Right.
to
Yeah.
bring other people along with your thinking, and it just takes time.
Yeah. 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 I guess on the sell side, we had to get approval, but then we had to convince all the buy side, I guess. Like we had to go, or at least convince the sales team to, that it's a worthy idea. So similar, I guess.
Yeah.
So so if you're looking at like everything now, how do you kind of like, that's a pretty big universe. Like do you follow like an analysis process, or like do you like just read a bunch of companies? Like what's sort of that look like for you now?
Yeah. I mean, I think so. There are, um, I mean, I would say so for the sectors that I used to cover on the buy side, I have a pretty good idea of what's going on there.
Hmm.
So things like hotels, real estate, cruise, which is kind of what I covered at T Rowe, consumer at Blair.
Yeah.
Uh, there I still follow those sectors too, but I think from kind of a more overall, top-down point of view, I try to focus my attention on sectors where I just think there's going back to the conversation about the industry setup, where I think the industry setups are more interesting, right? So
Right. Okay.
so I have probably spent a fair and an inordinate amount of time on natural resources
Hmm.
over the past year. Not because not because my background is lies there, but that's just where the opportunity seems to be.
Yeah. Makes sense. So it's almost like industry or theme kind of
Yeah,
focus.
and
Yeah.
in 5 years, I'm sure that'll look very different.
Yeah. Yeah. So I guess I get this question a lot sometimes from like young people. It's like, do you go top down or bottom up?
Both.
Both, right?
Yeah, no, I mean, again, so from the industry point of view, I definitely think about kind of making sure that the wind's low, kind of blow the sails of the boat that I'm in and where I want to go instead
Yeah.
of in my face. But within that, I mean, you can't just my background's always been stock specific, kind of stock specific or in stock picking.
Yeah.
And so I'm very much kind of a person who looks for, it's like, well, why is this the right? I mean, like, so okay, great, this is a great industry, but what's the best company? Like, which horse do I really want to ride?
Right.
Because you could pick the thoroughbred or the horse heading to the glue factory, and I know I'd rather like ride the former than the latter.
Yeah. Yeah. Makes sense. I feel like that's like a learning that a lot of people in the industry learn. Like, you don't want to pick the second guy. You always want to pick the best, generally
And
speaking.
sometimes, but it varies too by industry, right? And I think technology has trained
That's
everybody
fair.
to think winner takes all.
Yeah.
But that's just not the case in most industries.
Oh, like there's like maybe like second or third can do just as well as the first.
Yeah, I mean, like, so if you look at hotels,
Mm,
Marriott's done great, but so has Hilton.
right.
Like
Yeah, that's
it's
fair.
actually been, and for a long time, Starwood was actually a good player until they got acquired by Marriott. And so
Right.
you can have multiple players do well in a cycle.
Hmm.
It's usually more than one company that's well positioned competitively. And so those are also nice situations to find because I think that tends to lessen the competitive risk a little bit.
Yeah.
Uh, but B, it just gives you more flexibility and more options, right? So if there are two or three investable companies in say, specific industry, then you've got more shots on goal at finding one of them, which, for whatever reason becomes mispriced rather than just the leader becoming mispriced.
Yeah. Got
So I
it.
actually kind of like that.
Yeah. Makes sense. Um, any tools that you use these days? The like what's like kind of your setup now in terms of
Yeah. Yeah, I mean, like, I obviously I use Refinitiv for kind of stock specific stuff and kind
yeah.
of platform. But I mean, process wise, I mean, obviously I read a lot. I listen to podcasts. I kind of, obviously lots of earnings calls,
Right.
investment letters,
Yeah.
just talking to people. Um, it's kind of a multifaceted process. I think the more kind of ways you have of finding ideas, the better.
Yeah.
I'm not as big a fan of screens. I very rarely found them to
I
be
never really
useful
like
to me.
screens either.
I just, A, because all the quantities and B,
Yeah.
like if you're doing fundamental investment analysis, screens just miss so much, right? I
Mhm.
mean,
Yeah.
and that is kind of the point. And I feel like that is where a lot of fundamental investment analysis will pay off, right? It's something that doesn't screen well is typically not owned,
Right.
but it may not screen well for a really good fundamental reason, right? You know, and 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 it could be fun, it could be could have something to do with industry changing, but it could also just be things like write downs or kind of weird gap accounting things. I mean, just the gap numbers a lot of times can be extremely misleading too, right? And
Yeah.
if you're using gap to look at real estate, good luck. I mean,
Right.
just
Yeah.
doesn't work.
Yeah. Yeah. That's also like a source of I don't know if it happens as much anymore, but I remember early on, sometimes there would be companies where like the gap numbers are really bad, but if you just looked in a little deeper, it's maybe they're like changing their accounting or like they're getting a bunch of sales, but it's just not getting recognized. It's in like
Yeah,
deferred
or my
revenue.
favorites, like the business model is changing, right? And
Right.
so gone from like booking everything up front to a subscription based service. And so revenues are down, but actually it's turning into a higher quality business. So that's
Yeah.
a good thing, right? But it screens poorly.
Yeah. 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 That was like Chegg. That was what I saw. um, got it. Okay. Do you still use models?
I do, yeah. I mean,
Yeah.
I would say probably, maybe less religiously than before.
Right.
Just because in my experience, if and I and this is great advice I got from one of my mentors on the buy side was like, if you have to build a really fancy spreadsheet
Uh-huh.
to show that something is a good investment, it's probably not.
Right.
You know, if the math doesn't work on a napkin, um, it's probably not worth pursuing further, right? Now,
Yeah. Mm.
once you get through the napkin test, you probably want to understand all the nuances of, stress testing scenarios, kind of, looking at what balance sheet cash flow looks like. But, like having a 400 line model, a quarterly model that kind of tries to capture all the minutia of things is probably a waste of time.
Yeah, makes sense. So it's
Unless
more
you're
like,
trading the quarter and you're trying to figure out if the company is going to beat by a penny or miss by a penny, and that's just not a game I play.
yeah, right. That's more like the hedge fund pod kind of game. Yeah, that makes sense. So it's more like, like the rough back of the envelope or napkin math over the next 5 years. And if it makes sense, then you build a model to kind of see the scenarios. And maybe
Yeah, exactly.
just, yeah, got it.
Yeah, and I think in terms of annual account models several years out, I don't really look at quarters. I mean, quarters are important,
Yeah.
just to make sure things are tracking. But in terms of model building, after having built many of these quarterly models over the years, I have not found them to be extremely useful.
Yeah, they are kind of a waste of time.
Uh,
Yeah. Well, I mean, I guess, right. If you're not a hedge fund pod person, they don't really do much. Yeah.
Yeah, and by the way, that's something the sell side is actually quite good at, is building a quarterly model, right?
Yeah, right. Right. Yeah. I remember we had to we had to build quarterly models and we had to just get everything and just get to the number. Yeah, they were very good, but it just felt like a lot of work for
Yeah.
um cool. So I guess one thing that was like on your mind is like some merger arb stuff that's kind of been in your radar.
Um, yeah, I think we talked a little bit about that offline.
Yeah.
Yeah, I mean, in terms of like interesting things that have happened, going back to this, you asked the question earlier about how things have changed since I left the buy side. I mean,
Yeah.
one of the other things that's kind of happened is I've started kind of, on the buy side, if you saw, for instance, that, a merger, there's a merger that was announced, and, the relation of two stocks should have been X, it was 0.95X.
Right.
Probably something that you can capture at, a $400 billion asset manager,
Yeah.
or even at 40. But as an individual investor, it can present interesting opportunities. So I remember earlier this year, I had a company that I owned that announced they were acquiring another company in an all-stock deal.
Mm-hmm.
And they made another acquisition that was kind of half cash, half stock.
Mm-hmm.
Well, the company that announced the acquiring company was actually relatively small. It was something like a $500 million, I think, at the time. And they were acquiring an even smaller company, right? So right away, most of Wall Street, you know, boring, just like, thank you very much, we're not interested. Stocks are not tradable. They, all the hedges can't, none of them can really get volume on any trades, right? Even if there are dislocations. But as an individual investor, I saw a 15 to 20% spread
Oh wow, that's a big
between where the
spread.
stock, where the company being acquired should have been priced,
Yeah.
and what the company that was acquiring them was. And so, yeah, it was in those couple cases, it was actually extremely profitable to sell the company I owned that was acquiring the target, and I simply bought the target. I did
Right.
that twice and made 15 to 20% both ways.
Wow. Yeah, because that's normally like, right, the acquiring company is making a bid, and then usually the stocks like have this little spread just in case the deal doesn't work out. So that
Right,
that spread was 20%.
15 to 20, yeah,
Wow, like on an annualized basis or just like
just absolute,
absolute? Wow.
absolute, yeah,
That's wild. That's
that was
great.
wild. And again, it goes back to these market frictions, right?
Yeah.
Like the acquiring. Usually, what you would do in a merger or deal would be you would sell the acquired company shares, and then you would buy the target shares if you wanted to close
Yeah, to
the
close that
spread.
spread.
The
Yeah.
problem is no one could borrow the shares of the acquirer because it
Uh
would be tightly held,
uh
and the borrow was quite expensive.
yeah.
And then the target company the target companies similarly were not very liquid. They were pretty small.
Yeah.
And so it's not something you could have done in size in terms of millions and millions of dollars, but from my point of view, it proved to be very profitable.
Yeah. I remember we had like a merger arb trader, but anytime like a merger happened, but then they would get into like this, like they would start reading all the deal documents, and like it would feel like a legal exercise. Is that something that you were doing as well? Like sort of, because they would try to assess the probabilities of a deal closing or not.
Yeah, I mean, I think in this particular case, I had already done the fundamental. I had knowledge of the company that was
Oh,
acquiring
okay.
them and
Yeah.
the industry, and so it was pretty easy for me to gauge the probabilities
Got
of
it.
the merger. So it just kind of happened. It almost kind of fell into my lap. It was
Yeah.
less me looking for it than it was me kind of tripping across a $100 bill and deciding to pick it up.
Got it. Okay. Oh, so it was like a sector and company you were already kind of following, and then
Yeah,
like, wow,
yeah,
that's awesome. That's a great, that's a great find.
yeah. I hope it happens a lot more often.
Yeah, exactly right. um, and I do want to ask about like one thing about I guess the energy kind of view. So do you think this like energy kind of I mean, do you think it's sort of like a structural, like many years energy is going to keep going up as like or inflation, I guess, is maybe the way to put it, like from a
Yeah,
fundamental view?
I think inflation and energy are probably two separate questions.
Yeah, that's true. Yeah.
Just because I mean, like you can have periods of high energy, you can have periods of energy bull markets without huge inflation spikes. I mean, just look at kind of the last cycle
Oh,
from
fair enough. Yeah.
2000,
2012.
2007. Some
Yeah.
people market in 11 or 12 as the peak,
Hmm.
but um, yeah, so it just kind of depends. But from an energy cycle point of view, they do tend to be multi-year, and the reason for that is because there's a lot of I mean, they're capital intensive businesses, and if you
Hmm.
underinvest for many years,
Yeah.
you can't just flip a light switch and catch up in a year, right? It just doesn't work that way.
Right.
There's a lack of service capacity. There is scar tissue among investors. Banks are not willing to lend.
Hmm.
Management teams are gun shy, right? It just takes many years for all that to actually get worked out. And so I do think, unfortunately, or fortunately, if you own the stocks, uh,
Right.
that higher energy prices are probably going to be with us for many years. Um, you know, that being said, there's a cyclical element as well, right? And so, while I think my structural view is pretty constructive on the cycle, you do have to think about kind of whether we could get a pause here, with a potential recession
Recession.
and
Right.
downturn in demand shorter term. But what's interesting about that is that it depends kind of where you are at, and a lot of people, I think, have already priced that into energy equities,
Hmm.
especially with oil having kind of come off recently.
Yeah.
Uh, but what is interesting, and people forget that, and we had three recessions in the 70s and 80s, in the kind of early 80s. Um, oil prices went up all throughout the 70s, right? They
Hmm.
didn't dip even in recessions, which kind of speaks to the kind of the power of the capex cycle in energy,
Yeah.
right? So because if you think historically, if you think about energy demand, it takes a lot to reduce energy demand year over year. I mean, it's
Mm.
relatively
Hmm.
inelastic. Obviously prices swing around wildly, but if you're going to see pressure on supply, a lot of times it's not clear prices have to go down if supply is constrained, even in kind of a when demand levels off,
Hmm.
short of a large fall. Now, obviously, if there's a large fall, I think prices will definitely fall.
Yeah. So it's more of a supply issue, and keep until, I guess, until CapEx comes back and there's more supply, I guess, and
Yeah,
more financing to the sector. It would make sense that it would just keep kind of chugging along until those conditions change.
Yeah, and so again, yeah, absolutely. Again, I'm not trying to make the point that prices can't decline. I'm just saying that, seeing a collapse in prices as there's a lot of fear in the market, I think could be misguided this time around. But we'll see. I mean, it depends on
Yeah.
the if you get a depression, I guess everything's possible, right?
Yeah. Yeah. And why do you think inflation will keep going?
I mean, so again, I'm more of a stock specific guy, but I
Yeah.
just see kind of my, like if I want to put my macro hat on, I mean, so I do think that the energy, we're gonna have an energy crisis for many years. I think that's definitely gonna be supportive of inflation. That in and of itself is probably, that may or may not be enough if other factors are kind of in your favor. But then I look around the world and I see kind of the world decoupling, right? So China and India are kind of being increasingly ostracized.
Mm,
Uh, we seem to be deglobalizing and going
right.
from just in time to just in case inventory and supply chains. That's very expensive, and if you and building in redundancies, means higher costs, and that is going to be, I think, pretty inflationary.
Mm,
And so that's obviously that's another factor to think about. I think when you look at demographics, I think the arguments I've heard from people is that, well, people aging,
right.
that's deflationary. It's like, well, I don't know a lot of people who retire and stop consuming.
Mm,
But I know a lot of people who retire and stop working.
right.
And so that's not helpful for labor costs, right? Because if you have
Mm,
a lot of people who are heading into their retirement age, and you're going to lose a lot of labor supply, but you're still not going to lose a lot of consumption, particularly if the governments continue to, have fiscal largesse for their population,
mm,
and are not going to cut entire benefits, right? Which doesn't seem to be very popular.
right.
Then I think you're just going to have a very tight labor market, and that's going to feed through to a lot of things over time. So, and then we haven't even talked about the food price, kind of the food situation where, you've got, we've had a number of years of very favorable conditions, but now we're going to a situation where energy costs have gone up, which
Hmm.
obviously are major input into agriculture.
Right.
Um, we just lost a big chunk of Ukraine exports, which
Ukraine. Yeah.
are a big portion of the kind of grains in the world, and that's probably not going to come back. A lot of that is not going to come back online. It's not going to come back to where it was, right? Just given the damage and kind of to infrastructure that Russia has already inflicted there,
Hmm.
uh, and just so that's going to be difficult. And then you look at the fertilizer situation, right? I mean, because natural gas prices have spiked so much, um, and we had a lot of fertilizers coming from the Belarus Russia region, that now seems to be, very much in jeopardy. I think we're gonna have a fertilizer problem, and
Mm,
fertilizer, is a huge input into yields of crops. And if you reduce fertilizer application, you're gonna get lower yields.
yeah. Yeah.
And food demand is very inelastic. You think energy demand is inelastic. I mean, food demand is the most inelastic thing you can think of, right? And so if you had a 5% shortfall, in a crop, I mean, the price could double.
Right. Right. Got
And
it.
so, I don't see how that situation gets fixed anytime in the near future either. And so and that's going to be a multi-year exercise to kind of get us to extricate ourselves out of that one too.
Yeah. There's like a couple. Yeah. It sounds like a variety of. Yeah. You have
Yeah.
to.
And then I think, just going back to the globalization and demand, I mean, people forget that we had kind of almost a perfect moment in history where in the 90s and 2000s, you had all this labor coming from kind of the former Soviet republics, as kind of the USSR fell. And then China opened up and entered
Mm,
the WTO and started exporting, right? So you basically had, something on the order of what, 2 billion people coming into the
during the labor
global
force.
labor force.
Uh,
Now, that's not only is that past us, but if you look at the demographics of those 2 billion people, they're now going to be shrinking rapidly over the coming years. So
Mm.
it's not just a US labor problem that we're looking at a global labor problem.
Oh, wow. Oh, I never thought of it that way. Yeah. It's like a global
Yeah.
demographic labor decline.
Yeah. And,
Yeah.
yeah. And, the people, I guess, would tell you that, technology will solve all problems, but, we've had technological improvements every year, and yet we've still gotten periods of severe inflation and periods of deflation, right? So I
Yeah.
kind of think technological improvements is, more or less a given every year. We're going to make some progress, but if those other factors flip the wrong way, it could be problematic.
Yeah. Yeah. Hmm. Lots to
Yeah.
think about.
So
Anyway.
that and for I guess $5 now, we'll get you a Starbucks coffee, I guess.
Right. So what I guess what, kind of finish up, what kind of lessons of the buy side or your experience you think it would be great for for new investors in the stock market to use or just keep in mind?
Yeah, and I think the things that I would maybe kind of think about is just the most important thing is just develop your own view and kind of thesis on
Hmm.
something. Um, don't buy or sell a stock just because somebody that you respect or hold in high regard is buying or selling, because there's so many kind of there's so many nuances that go into buying and selling something, right? It really is risk versus reward, and it's always a weighing. It's always like I think of this as just kind of a weighing machine, right? Like at
Hmm.
every moment in time, I'm weighing what is the risk, what is the reward, and any number of things will change that, and your guru is not gonna tell you why they're selling and when they're selling. And if you're off by a week or two, that could cost you very dearly. Similarly on the buy decision. So I really think, and the other thing is you're not going to stick with an investment when the going gets rough. If you don't understand why you don't, if you don't understand why you own it. And
Hmm.
so I think the number one lesson I would tell people is just develop your own thesis for why you want to buy something and when you want to sell it, right? So I own this because of XYZ, and if XYZ changes, I'm selling. Or if the price gets to, where I think the fair value was when I bought the stock, well, why do you own something that's fairly valued, right? The point of
Yeah.
investment is to buy something that's undervalued. So if it's
Right.
fairly valued, that means you sell. You should be selling.
Right. Right.
So I think that's kind of been the number one thing in my mind. But just from lessons that I think I've picked up over the years, I mean, I would definitely think longer term. We
Hmm.
spent a lot of time talking about kind of these short term, kind of Wall Street quirks. If you can think a few years out, I think generally you'll be pretty well rewarded for it. There's definitely, I'd say time horizon alpha to be had in the market.
Yeah.
I think looking at both macro and micro is important, as kind of the Marriott story demonstrates. And
Hmm.
I think Wall Street is balkanized in such a way where there's a lot of micro funds on the one side, and there's a lot of kind of stock specific people on the
Yeah.
other. But it's rare to see people look at both at the same time,
Hmm.
but they both matter, right? And so if you're
Yeah.
buying a stock, you really should have an idea of where am I in the cycle, what does the industry picture look like, and why is this the best company? And if you can answer those questions, you've got more work to do. Um, and then I would say the last thing is just think about this idea of dominant trades, right? It's like, why is this the best thing? Like, if I believe X, why is company Y the best investment?
Yeah.
Why something else do better,
Hmm. Talking
right?
about like the best expression of the view.
Yeah, like
Yeah.
why is this company like, yeah, okay, great. If oil prices go up, Exxon's gonna go up.
Right.
Exxon the best way to really like, is that the best stock to buy, right? And
Yeah.
probably not.
Yeah. Yeah. That might be more leveraged plays or something like that. Yeah.
Right. So I think those are kind of the big things that I think people could probably take away and improve their process.
Yeah, that's great. I definitely agree. I think it's great to have more people kind of develop your own view, kind of understand how to go about doing things. So how can people learn more about your work right now? Yeah,
Yeah.
better.
So for anyone who's interested, would invite them to visit our website at www.copernicus-ir.com. They can kind of learn more about my background there. They can look at the sample of the EQT report, and just kind of get an idea of what our process and methodology is. Um, you know, I kind of started the firm because, part of the reason I started the firm is because I do think there's a dearth of kind of newsletters out there that kind of have thoughtful stock picking analysis. I think there's a lot of good macro and maybe technical newsletters out there,
Hmm.
but not so much on the stock specific side. And so I'm really kind of hoping to help people who are more self-directed, and do want to take more of an active role in their investments. Really hoping that the service kind of helps them achieve that.
Yeah. So they get like a newsletter and like sort of stock ideas. Is that kind of what
Yeah, so it's a
yeah.
monthly newsletter, so it comes out 12 times a year, and most months it'll have a new kind of stock specific idea where we think something is interesting and asymmetric.
Hmm.
Other months, and so far we've only had one, but probably like more over time. It's just kind of more of a deep dive, or kind of more of a thematic um, angle, but again, with the thought of like, well, what are the investment implications, right?
Yeah.
It's I think the point of a newsletter should be, get to the so what part.
Hmm.
Don't describe the picture, tell me what to do and
Yeah.
why.
Tell them what to do. Yep. Yep.
And in that process, perhaps describe, we'll get to the description, but I think our investment reports always try to lead with the conclusion first,
Yep.
have the rationale later.
Yeah.
Something
Something
more
that's
actionable. Yeah.
think that's like something that's been drilled into me too, is like from Wall Street. It's like get straight to, like what can you do? What am I doing with the stock?
The sky is blue and the grass is green. So what?
Right. Yeah. Am I buying or am I selling? That's awesome. No, this is great. This is really, I think this is really great stuff. Um,
Yeah, no, enjoy the conversation. It was a lot of fun.
yeah. Sounds good. Yeah, thanks. Yeah, I think investors get a lot out of this.
I hope
Cool.
so, and maybe we can do it again at some point.
Yeah, sounds good. All right. Thanks, Michael.
All right, thanks, Sam.
Hey, so my guess is if you watched the entire video, you love investing in markets just as much as we do. So stay in touch. Make sure to check out Michael's website so you can take a look at his newsletter and get more information about his product. And also below, you're going to see a link to sign up for my email list. This way you can get access to all the latest videos, all the latest tools, and all the latest tips so that you can make your stock investing better. I'll talk to you soon.